What's the impact of your personal credit or your personal financial situation on business lending? Well, that's exactly what we're going to talk about today. Look, anybody that tries to convince you that your personal credit quality itself doesn't affect your ability to get credit and financing is misleading you completely. And today we're going to decode this. We're going to talk about credit scores you probably don't even realize that are on the business side that take into account things on your personal side, including your personal credit scores. We're going to talk about how your personal financial situation even can tie in with things that are seen on the business side, reflected into credit scores and other things that lenders and credit issuers see. But most importantly, we're going to talk about what you can do to prevent this. We're going to talk about what you can do to control it. We're going to talk about how to improve your situation so your personal side actually improves your ability to get credit and financing. It doesn't diminish your ability to get approved for the money that you want and need. So today we're going to dive in and talk a lot about business credit. We're going to talk about personal credit. We're going to talk about the impact of personal credit on certain aspects of your business, even the credit scores that it affects. So if you fund your business with your personal credit, well, then your personal finances can suffer. But here's the problem. It also can be the reverse as well. Personal finances, personal credit can still affect your business lending options. And we're going to talk about how to sway this in your favor today. So how does this impact it? Well, there's a lot of things. For most obvious, some business funding options consider your personal credit score. That's pretty basic, right? There are some loans out there like SBA loans, for example, credit line hybrid, traditional loans, term loans, which just will look at your personal credit score and that actually will determine the rates and terms you pay, the likelihood of getting approved based on your personal credit quality. But there's other things to think about here as well. So some business credit reporting agencies take personal credit into effect as well. They take it into account, I should say, as well. So there are business credit scores which actually take into account your personal credit scores. And we're going to talk about some of those bureaus, some of those scores, how they work, how to control this to be able to lessen the damage if your personal credit has issues now. So if your personal credit is bad, well, then your business is going to suffer 100%. Because there is types of loan programs that are based on your personal credit quality. There are credit scores that are based on your personal credit quality as well. So we've got to be able to get this where it has minimal impact on you. So even if you haven't fixed your personal credit issues yet, you still don't have to suffer on the business side as a result. So keep in mind that there's a lot of factors that affect your personal credit. Okay, so there's five main things that actually make up your consumer credit score. So when we look at personal credit, the biggest factor of your personal credit score, the FICO score, is payment history. It accounts for 35% of your overall score. And let me actually see if I can bring this up real quick, and I'll show you if you have never seen the FICO pie. We'll see if we can bring this up right now and show it to you so you can see exactly how this works. So if we look at this, 35% of your credit score is made up of personal credit or of payment history, how you pay your bills. Do you pay on time or do you pay late? And as a matter of fact, the more recent the accounts that you have will tie or weigh heavier into this aspect of the score than others. So let's say I have a late payment 5 years ago on an account and a late payment last month. Well, as you might imagine, the late payment last month has greater weight into my overall FICO score than the one 5 years ago. So the older a late payment gets, the older a collection, the older a derogatory item on the credit report, the less impact it has on the overall score. This means if we have negatives on the credit report, then we want to get positive credit history to offset this as quickly as possible. Look, I owned a consumer credit company and sold it many years ago. And I can tell you, this is one of the biggest mistakes that people with credit issues have, is that they have bad business or bad personal credit, and then they think it's just going to reverse or fix itself in time, and it won't. The only way you can fix bad is to build on positive. So one of the best pieces of advice I give you for this aspect of your FICO score is have more good accounts than bad. So if you have late payments and collection accounts and negative, you've got to rebuild by getting positive credit, even if it's secured credit cards or signature loans or low limit credit cards. Whatever you need to do, you need to add positive payment history and make sure that you have accounts that you're paying on as agreed. The more accounts you have that are positive and the more recent they are, the easier it is to overcome damage from the negative accounts. Now, this is one of the biggest aspects that we care about the most. 30% of your consumer FICO score is made up of utilization. Okay, this means what percentage of your limits do you have in regards to your balances? So what percentage of your balances make up the actual limits that you have? So for example, if I have a $10,000 limit account, then the higher my balance is, 3 grand, 5 grand, 7 grand, 9 grand, 10 grand, the more damage it causes to this aspect of the score. Now, let me dispel some myths here. Okay. First of all, a lot of people think that utilization is just revolving accounts. It's not. It actually is applicable to installment loans as well. This is exactly why, if you've ever gotten a car loan, you've ever gotten a mortgage, your credit score can be expected to drop upwards of 100 points when that loan first hits your credit report. And the reason for that is that 30% of your consumer FICO score is utilization. And if you get a loan for 50 grand and you owe 50 grand, then you're maxed out. You basically have a loan for exactly what you took the loan out for, and that will lower your score for about a year until you start to pay that balance down. So utilization does affect, or it does take into account, I should say, revolving credit and installment credit as well. Something to keep in mind. Okay. The other thing to realize here is that when we talk about utilization, this is nearly a third of your score. If we look at the math of FICO, we see that FICO is saying that how much you have in relation to balance and limits is almost as important as paying your bills on time. This is why you've got to keep very low limits on your credit cards. Now, here's another myth. Everybody says keep it below 30%. There is no 30% number. That's completely made up. It's BS. There's no truth to that whatsoever. The reality is you want your balances to be as low as you possibly can. Like, you would like to keep some kind of balance to show that you're paying a payment on time. That helps the payment history of your credit report. But the reality is, if you can keep balances below 1 or 2%, you should. Okay, it's not when you cross a threshold, it starts causing damage. Any kind of balances you have on the account adversely affects this aspect of your credit score. Even contrary to popular belief of this 30% number somebody's made up along the line doesn't really exist. The reality is that any balance will start to lower that FICO score. So keep your balances as low as what you owe. And most importantly, as I preach all the time, stay away from business credit cards that report on your consumer credit reports. Because as you utilize those credit cards, then that will damage your personal credit scores. Remember, personal credit cards were never designed to fund businesses. The limits are inherently much smaller than what business credit card limits are, because personal credit cards were used for your personal life, not to fund a business. So if you try to use them for the purpose of funding your business, you'll quickly put higher limits or higher balances on those and adversely affect your credit score. And that's going to make it harder for you to get the money that you need to get. So now let's look at new credit. A lot of myths here too. Let's dispel those. 10% of your consumer FICO score. Actually, you know what? Let me come back to that. We're actually going to go to the length of credit history next, because that's the third largest aspect of your score. Now, this takes into account two things. One, what's the oldest account you've had on your credit report? What's the very oldest? If we go to the very first account you had, how old is it? Secondly, what's the average age of all the accounts on your credit report? So in order to affect this, the only thing we could do to positively impact this is to get added as an authorized user to like a family member's credit card where they've had the credit card open for a longer period of time than we've had credit. It's the only thing you could do. You can't add credit and backdate it. Trust me, I've legally tried to do so. It doesn't work. The only way you can improve this is to get added as an authorized user to like grandpa's credit card, dad's credit card. They have a long history. That can positively impact this aspect of the score. Now we go to new credit. Some myths I'm going to dispel here as well. A lot of people think that inquiries adversely affect your consumer credit reports. It's not true. An inquiry doesn't hurt your credit scores 1 point, 2 points, 5 points, 10 points. It doesn't work that way. There's several factors that actually affect the impact of inquiries on your credit. First of all, do you have groupings of inquiries? It's not okay. It's okay if you apply for a Chase credit card, but if you apply for 7 credit cards at the same time or roundabout in a short period of time, that will adversely affect your credit score. These groupings of inquiries where you're going and putting a lot of inquiries in a short period of time, that's what has a negative impact. Now, all mortgage or auto inquiries in a 30-day period only count as 1 into your score. So if I go and check with 12 lenders to get the best rate on a mortgage, and I do it all within 30 days, then what's going to happen is that that's actually only going to be counted as 1 inquiry on my credit report when it comes to the score. Now, don't get me wrong. Okay. You will see those 12 inquiries on the credit report, but it'll only count as 1 into my FICO score if they're auto or mortgage inquiries for obvious reasons. And what I mean by obvious reasons is if I go to apply for a car loan today, that lender very often can shotgun the application to 12 lenders. And then all of a sudden I suffer because all these lenders are pulling my credit. That's why FICO changed it where mortgage and auto all increase for either one of those sectors in a 30-day time period actually only counts as one into your score. Now, here's something most people absolutely do not know about this section of the credit score. It actually takes into account the amount of inquiries you have that actually end up being accounts on your credit report. That means if I go apply for 10 credit cards and I get denied for 10 credit cards, it radically affects me in a bad way. Okay, but if I apply for 10 credit cards and I get 10 approvals, every inquiry resulted in an account that actually was approved and put on my credit report. It would have less of an impact to this aspect of the score than if I actually don't get approvals. This is why you have to be strategic in business and personal. You should only really be applying for what you really think you can get. And this is why I talk in the business world so much about fundability, the tiers of business credit billing, because that's where people get stuck is they apply and get denied. So you always want to try to only apply for credit you really think you're going to get. Because if you start applying for stuff and getting denied, then you go somewhere else and apply and get denied, then this will radically adversely affect this aspect of your credit score. And of course, the last one is credit mix. And this has to do with the kind of mix of credit you have. Preferably, FICO wants to see 3 major credit cards, Bank of America, Chase, Wells Fargo type credit cards, not store cards, 3 major. We want to see 1 to 2 mortgages. They want to see 1 to 2 auto loans and 1 to 2 other kind of signature loans. If you get without that realm, more than 3 major credit cards, more than 2 auto loans, more than 2 mortgages, that will adversely affect this aspect of your score. Now, this is where people get stuck. Hey, I have 5 major credit cards. Should I shut down 2? Well, how long have they been open, right? If they're long-standing accounts, that could adversely affect the length of credit history, which has more weight, 15% to the FICO, than credit mix. You're better off to leave those standing. If you have a lot of payment history, those could be helping you more than hurting you. So it's not necessarily the best case to go in and start closing accounts to get to 3, because then you lose all the positive payment history you have, 35% of your score. The length of credit history you have as well, 15% of your score. That makes 50%. And you shut down credit cards, lowering your overall utilization, which, by the way, takes into account your utilization across all of your accounts and your utilization individually on your accounts. So you wouldn't want to do something to improve 10% of your score that now, as we've counted up, would adversely affect 80% of your score if you did it. So you got to be careful. And this is the problem with FICO, is when you try to improve one aspect, you damage another. Let me give you some simple examples here. So if I come in and I say, okay, I don't have the right credit mix. I don't have a mortgage. So I go and get a mortgage. Well, now you know that would adversely affect my utilization. So now I try to improve this and I damage this, right? And so that's the way FICO is. If I try to go get new credit, a mortgage, well, then I put inquiries on my credit, lowers this part of my score. I then have amount that I owe is the same as my loan amount that I originally took out, hurts this aspect of the score just to help this aspect. This is why it takes many years of well-disciplined borrowing to really have 800 plus credit scores in most cases. And this is also why business credit's way easier to build, because business credit only looks basically at payment history as the main scores, right? So open to questions. Tell me where you're from, by the way. Brian, thanks for coming in from Colorado Springs, Triad of Success LLC. I love it. Thanks for saying hello. Don't forget to give me a shout out. Tell me where you are from. I always appreciate it. Ebony says, I'd like to schedule a time to speak with you. Please do so. You can go to creditsuite.com/consult. Give us an email at info@creditsuite.com or give me a number. My number's on the bottom of the slides and my team will help you get connected. Mark says, any place I can find a business credit comparable credit scoring chart. Give me some more insight, Mark, on what you're looking for there. And I can try to give you what you're looking for. It's tough. Now you've seen FICO. But remember, business credit reports typically have 5 credit scores. So DNB, Equifax, Experian, they have like 5 different credit scores per each bureau. So you have different credit scores that look at all different kind of things, which is why you're probably not going to find a consumer credit score against a business credit score comparison, because business credit has so many scores. But it's pretty simple if you want to see the comparison. FICO looks at all these 5 factors. Business credit only mainly looks at this one. Paydex score, DMB or Equifax's credit risk score, Experience and Telescore. The main business credit reporting agencies' main scores only really look at payment history. That's it. That's a comparison. But there are a lot of scores, so it's kind of tough to compare them because there are so many. And Willie says, New Jersey, what's up? Ties on point. I appreciate you coming in. Taisha says, hey, Taisha Resources Corporation nonprofit, checking in from Southwest Houston, Texas. Hello, Southwest Houston, Texas. Taisha, thanks for saying hello. And DL says the scores won't reflect the score changes until next month. The Experian app says 754 already. I'm above 700. What should my next move be? Mortgage for a rental, high limit credit cards, business credit? I'm not exactly sure what you're asking, but on the consumer credit, now you know I would get the perfect credit mix. So I would get the mortgages, I would get the car loans, I would get the credit cards. That's really what you want to do. And if you have that right credit mix, now you just need to make sure you keep your utilization low, keep paying your payments as you are, and that will get you up to the 800, 850 score you're looking for. And Veronica, hello. Thanks for coming in saying you love the content. I appreciate that. Bismarck Sanchez. I love Bismarck Sanchez. Bismarck Sanchez is always here from California in the house. And Let's Employ America, Detroit, Michigan. I appreciate you coming in as well. And Brilliant Nolan, I haven't seen you come in here before. Hello, thanks for coming in from Greensboro, North Carolina. I'm excited you could be here. So now we understand the FICO score, right? Now we've got to keep in mind that we don't want to use personal credit to be able to fund the business because, as you now know, that will adversely affect our actual credit, or our credit score and our utilization on the personal side. Why does it matter? Here's why it matters. Credit line hybrid, perfect example. This is a funding product where you can get up to $150,000 in real usable credit lines. It's no doc. It doesn't require bank statements or tax returns. A startup business can get it. You get 0% rates for 6 to 18 months. So really basically no interest for upwards of a year and a half with the program. And you can also take the cash out at 0%. It's the only program in the world that lets you take cash out at 0%. So if we look at why it's called a hybrid, the best part of a credit card is that you get 0% rates for intro periods, 6, 12, 18 months. That's why we get new credit cards in a lot of cases. The best part of credit line is we could take the cash out without paying a cash advance fee of 20% or more. We typically have to pay on credit cards. This one combines the benefits of both. We can get 0% and take the cash out as 0%. So if I'm a real estate investor, I could get $150,000 in funding, take $150,000 out, use the cash to actually buy the real estate, for example, rehab the property, fix it, flip it, put a renter in there, refi it, whatever I want to do, and then repeat the process. Okay, but credit line hybrid is a perfect example because you've got to have a good FICO score in order to get approved. You have to have like a 680 FICO score. Now, the great news is you can use a guarantor if your FICO isn't 680, okay? But this is a perfect example. A lot of people come into us and say, okay, here's what I did. I used my personal credit card to fund my business, and it took a lot longer to get revenue coming in the door, and it took a lot more money than I thought. Very common mistakes as entrepreneurs. We underestimate how long and how much things are going to take in business, especially in the beginning. Okay, and now I need money. I need like another 50 grand, 100 grand. Then they come into us, and the FICO scores are 620, 630 because their utilization's high. They've maxed out their credit cards. Right. And as we just looked at in this scenario, that means that they basically came in and they've actually adversely affected what it now controls 30% of their overall FICO score. So their scores plummet because they used personal credit to fund their business. And now they're not able to get a program like this as a result. This is just one example. Term loans, SBA loans, there's so many examples of funding that will look at your personal credit to be based on an approval decision. And if you adversely affect your consumer FICO score, lower your scores, lengthen or raise your utilization because you're using personal credit cards to fund your business, then it prevents you from getting funding like this. So this is exactly why we don't want to use personal credit to fund a business. It's why business credit's there. And business credit, if you build it, it's designed for your business to fund itself so it doesn't rely on your personal credit. But again, this only works if your personal credit is good enough to qualify for programs like this. So it's exactly why we don't want to come in and use personal credit to fund the business. We adversely affect utilization. We lower our FICO scores. We lose the ability to get programs like Credit Line Hybrid. Now, let's talk about Experian. Experian has a score called the blended score. It blends your consumer credit scores with your business credit scores. That's the bad news. The good news is this isn't very popular. It's not commonly used. And here's why. I do not need your permission to pull your business credit report. If I go to Dun & Bradstreet right now to look at my business credit reports, the very first option they're going to ask me is, do I want to build business credit for my business or somebody else's? Or, excuse me, do I want to look at my report for my business or somebody else's? So if I go to creditsuite.com/reports here, this is an awesome guide, by the way, on building your business credit. Over 1 million downloads. Grab it while you're here, and my team is here to help if you need us. So you can get a free 30-day trial here to get your business credit reports. But if I go here, and let's say I want to do a search with Dun & Bradstreet, you can see that the very first questions they're going to ask you, and this is not my website. This is Dun & Bradstreet's being slow here. Apparently, they can't spend the money for something that runs faster, so we're going to go to Experian and use Experian as an example. Experian apparently has access to more money. Okay, so if we go to Experian, we can do a free check here to see if we exist with the business credit reporting agency, if they know who we are. Now, the very first question, am I getting a report from my company or somebody else's? So what this tells us is it tells us how easy it is for them to actually access business credit reports. Anybody that wants your reports can get them. But I need your permission to pull your consumer credit report. There's a law called the Fair Credit Reporting Act. It regulates consumer credit. It's called permissible purpose. I can't pull your credit report without permissible purpose or your permission. So because of that, a lot of lenders don't like to look at blended scores because they can easily get your business credit reports and scores without your permission, but they need your permission to pull the consumer scores or blended scores. But you should know that these do take into account. Experian does have a blended score, and it is said to be more predictive and reliant than just a business credit score, which is why some lenders use it. And it will take into account your consumer and your commercial credit scores. It's exactly why you want to do what you can do to improve your consumer FICO scores, okay? Now, as a result of that, when you do so, then you can have a better blended score when you establish business credit and when you have established consumer credit as well that's positive. Now, let's talk about that. What does it take to get a good FICO score? I'm going to give you some tips real quick here, okay? If we look at payment history, I've already given you a tip. We've got to add as many positive accounts as possible. The more positive payments we have here, the better off we're going to be. The more positive recent credit we have, the more it outweighs older credit, older late payments. And obviously, if you have negative stuff on your credit report, dispute it, okay? Hire a professional company to do it. I don't deal with consumer credit. I don't deal with consumer credit repair, but there's a lot of reputable companies out there that do this. So get with a company to help you or do it on your own, but make sure you dispute all the negatives on your credit report that you even begin to believe have any inaccuracies. Now, you might say, Ty, and I hear this a lot, hey, that was my account. It was really a collection. That's not the question here. What most people don't realize is when you pull a credit report, there's all this data when you open the account, what your high credit limit was, what your payments were every single month. There's all kinds of little codes that you might not even understand what they are. What happens is oftentimes credit issuers manipulate this data and they automatically change one thing versus another. And then all of a sudden it has more impact to your score than it should. I see this all the time. As a matter of fact, when I owned a consumer credit company, I found that over 80% of the time when I disputed something, then the creditor could not verify what they were reporting and the item had to be removed. That means 8 out of 10 negatives I ever saw on credit reports were removed because they did not meet the requirements of the Fair Credit Reporting Act. You see, the Fair Credit Reporting Act says everything on your credit report must be 100% accurate. It's got to be 100% verifiable. It's got to be 100% timely or within the statute of limitations that's allowed to report. If it doesn't meet that criteria, it legally cannot be on your credit report. But there's no government that regulates this. You regulate it. You have to look at your credit reports. You have to dispute those items if you believe there's any inaccuracy with any of the data, and almost all the time there is. And guess what? I don't mean to say that this is like a manipulation on part by the credit issuers intentionally, but I can tell you this. I've looked at tens of thousands of credit reports in my professional career over 20 years, tens of thousands. And to date, I found zero where the credit issuer made a mistake in the consumer's favor. I never saw anything that was a thing on the credit report that was wrong, that was positive and helped the FICO score. But of the tens and thousands I saw and all of the negatives, they all hurt the person's score. So again, the system is created where things are oftentimes misreported, little codes and things you don't know. That's what will actually lower your score more than it should be. When the creditor issuers and the bureaus are challenged, then from my history, 80% of that stuff gets removed because, again, it's not there to begin with. It shouldn't be there to begin with. Work with the company, do the research and help yourself. Don't care, but address it if you've got negative stuff on there. Utilization, we talked about it. Don't use consumer credit to fund your business, first of all. Second of all, ask for credit limit increases, okay? Do it all the time. I have a Discover credit card, and people think I'm crazy because I use a Discover credit card because I have no limit credit cards too. But one of the things I love about Discover is every month I can ask for a limit increase. Most people don't realize that. Most credit card companies will only let you do that every 6 months. Discover lets you do it every month. You just learned something, and maybe this is the only thing you learn out of this. I don't know. But that's a valuable point. So I just 3 days ago solicited Discover for a credit limit increase, and they just notified me, I don't know, like today. I think it was today I got notification that they raised my limit by like $3,500 just because I asked. I just asked like 2 months ago too. So ask for limit increases. Now, here's the catch. Don't do it if they're going to pull your FICO score. I always, if they say on the, and sometimes like my Citi card or USAA, my USAA limit's so low, it's ridiculous. Because when I go in and ask them to raise my limit, they're like, okay, permission to pull your FICO score. No, I will not ask them to raise my limits if they say that they've got to pull my consumer credit score. Here's why. Because they might raise my limit like Discover did, $3,500. But if I go to get a brand new credit card and I don't just ask for a limit increase, I would get 5 times that amount or 10 times that amount, right? So I would get more available credit if I got a new credit card than they used my inquiry to pull my credit just for a limit increase. So if they're going to if they're going to pull my credit, I never ask for them to raise my limit or look into it. But if they're not going to pull my FICO score, then I always solicit them in whatever time period they allow to raise my limits. And then, of course, try to keep the balances as low as you possibly can on your consumer credit reports. Okay, so let's talk about length of credit history. Oh, I told you, only one thing you can do to impact this. You can go to somebody that's a family member that has a long-standing account on their credit report and then have that added as an authorized user to yours. So I go to my dad. My dad's got credit for, gosh, I don't know. My dad's had credit for, 60 years of his life? So 60 years of credit history he's got. It's all positive. He's 850 credit score. So I could go to dad, have him be added to his oldest revolving account. That could impact this aspect of my score. It's the only thing you can do to positively impact it. 10% of credit mix. We already talked about the perfect mix. 1 to 2 mortgages, 1 to 2 other kind of loans, 1 to 2 auto loans, 3 major credit cards. Try to stay within that mix to maximize this. A new credit. We have already talked about this as well. Limit inquiries for consumer credit. How do you do that? Build business credit. Use business credit to build and fund your business, so you need less inquiries. You should never need a credit card for your business where there's a personal credit check. If you follow my trainings, I am teaching you how to build business credit where you can fund your business itself, where you don't ever rely on consumer credit. Okay, if you do that, that will minimize inquiries. Never use consumer credit inquiries unless you absolutely have to. And I'll tell you what I do. This is just a little hack I've learned. Like when I'm going to do stuff that's going to put inquiries on my credit, I tend to do it all at once and then not when I'm going to use that credit again for another 6 to 12 months. So for example, last year I went in and got 2 cars at exactly the same time. And I did it because I put the inquiries on my credit at one time. And then I know I'm not going to need that credit for another year to 2 years. So I let my credit recover from those inquiries because I did the inquiries at once and I let time pass between needing to use it again. So that's some positive tips that can help you on every single aspect of that consumer FICO score on improving it all, okay? Now, let me come in here. I want to answer some of your guys' questions. Oh, we've got some checking in from Portland, Oregon's in the house. Love the power of financial literature you provide and share. Thank you very much. I appreciate that. DL says, hey, have you had any deals on raw acres of land in your area? How much is an acre of land in your area? It depends. Around here, it really depends, right? I mean, you could buy a plot of land on the water for millions, $1 million plus. You could also buy other land as low as, 5 to 25,000. So there is land available, and how much the land is here in Tampa just depends on what area you're really looking for. Okay. And DL says, hey, if I buy land, is it better to buy in a business name or personal? If I don't have experience building homes, but I hire a builder, can I get a construction loan to build a for-profit property? You can. You can get a construction loan to build the property. You absolutely can do that. And I always recommend that any asset you own in a separate entity. So every property I own, every piece of land I own, every vehicle I own, they're all owned in separate entities. Now, I'm not an accountant. I'm not an attorney. This isn't accounting, or this isn't legal advice. But I do that for some level of protection, right? So let's say my car gets into a wreck, right? Maybe I'm driving it, maybe I'm not. And then somebody wants to sue the owner of that car, which is not me. It's my LLC. And they can sue the LLC, but the LLC has no assets besides the car that it owns. So it just gives me some layer of protection when all these crazy things that can happen out there. And again, I'm not an attorney. This isn't legal advice. This is me personally, how I do things. I handle all my personal assets. They're all owned in separate LLCs for that purpose, for that reason. Okay, and Angel says, hey, appreciate how in-depth your teaching is. Thank you. I'd like to have a consult. Yeah, absolutely. Give us a call, 877-600-2487. Our numbers on the bottom of our slides will be about every other slide. You can also schedule online here at creditsuite.com/consult as well. And Julie says, hey, I'm about to ask Discover for a limit increase. Fan-freaking-tastic. Yes, I just did it. And you can do it online in your portal with Discover too. It's super easy to do, just so you know. Thank you for that Discover card tip. I return the favor. Navy Federal sometimes automatically locks their credit cards from receiving automatic credit limits increases. You have to call them. Okay, so that's DL. Great tip for DL. I appreciate that. I appreciate the community sharing with each other, because these tips are what makes us better, right? It's what gives us access to more usable credit. Minnesota's in the house. Okay, and Sharonda. I've got to prepare my personal profile so I can be the one to add my kids as AUs on my accounts later. Okay, so let's talk about this. This is interesting. I got in before this was required. Nowadays, the banks all ask your date of birth, and you can't add your kids to credit cards. I got my kids in before that was done, added my kids as authorized users when they were little kids. So they have like excellent credit now at 10 and 12 because I did that. But nowadays, they're going to ask your date of birth, and they're going to want you to be 18 to be able to be put on there, just so you know that. But I love what your thinking is here. DL says, ask if they can remove the block from getting automatic increases. Maybe USA does that. I never heard of that until it happened to me 2 weeks ago. I got blocked from being increased for 2 years. I appreciate that as well. Thank you for that tip. And hey, thanks for all the information. Thank you, Chucky, coming in from California. And can you hook me up with a 5K on acre raw land deal in Tampa? I wouldn't be the guy. I'm not your guy here. I am in the land flipping business myself. I am, but Nevada's my state. I buy lots of land out there because I can buy 10 acres for $1,200. So that's what I do, is I buy acreage out there and flip it. And I also sell it on terms. But if I know anybody, DL, I can reach out to you and let you know. But this isn't my thing. I don't really have any kind of contact for raw land here in Tampa, unfortunately. But if I do, I will absolutely let you know. Okay, so let's talk about FICO SBSS. This is the FICO score for small businesses. It ranges from 0 to 100 with 300, or 300, with 300 being the best score. Okay, you need a 160 plus to get an SBA loan. FICO SBSS takes into account personal and business credit scores. Here's how it works. It's different. The reason you can't access it is it's different for every lender. The lenders decide what weighs into the score in what order. So Bank of America may say, I want Dun & Bradstreet, Experian, Equifax, commercial credit reports in that order, then TransUnion, Equifax, Experian. But then Chase might say, I want Experian, Equifax, Dun & Bradstreet in that order, then Experian, Equifax, TransUnion. So they decide what they want to weigh into the score more than another. But here's what you got to know. You cannot, it's mathematically impossible to have a FICO SBSS score high enough to get an SBA loan if you don't have any business credit established. You have to establish business credit, or you can never get an SBA loan because your business credit scores won't be high enough. Second thing, if you don't have established business credit, then your personal credit scores really make up a large component of FICO SBSS. So if you have no business credit and bad personal credit, man, that's disastrous when it comes to the score. And this is the main score used by a lot of lenders, including all lenders that issue SBA loans. Okay. And it takes into account business credit scores first, usually, then personal credit scores. So again, if you have damaged personal credit, having good business credit can still help you have a good score and can offset the risk of lower personal credit because it can weigh heavier into that overall score than consumer credit. So a lot of things to know here, but first, improve your consumer credit. I showed you how to do so today, every aspect of it. And also build your business credit. And if you do those things, that's going to help you maximize this SBSS score. We talked about how it's calculated already and how things weigh in more than other. Okay, so a lot of things we could do here, right? A lot of things that we've talked about today. Don't use personal credit to fund your business. Don't use inquiries to get personal credit cards. Build your business credit and use your established business credit report and score to get the credit cards you need so you don't need your personal credit. If you are going to use personal credit to get credit cards, get a program like Credit Line Hybrid. But make sure your utilization's low, your score as high as possible to get approved for as much money as you can. And don't forget, we also talked about what you could do to improve every single aspect of the score. Now, again, in business lending, I'm not going to talk about this today. We look at what's called fundability. 125 factors tie into your fundability of your business. But personal credit scores are 3 of the fundability factors. TransUnion, Equifax, Experian, those credit scores will affect the ability of your business to get money. So you really want to address that. Look, if you have damaged personal credit, we all do. It's okay. We're entrepreneurs. We're risk takers. Our credit reflects that. I work with business owners, so I can tell you that most business owners are taking risks that sometimes fail and sometimes succeed. And the failures sometimes adversely affect your personal credit, right? First company I owned was a mortgage company. Mortgage crisis occurs, wipes me out, ruins my personal credit for the course of a decade that it takes me to recover. So again, it's okay. Don't be embarrassed or ashamed that you have personal credit issues. It means in a lot of cases, you're a risk taker. It's why you're an entrepreneur. But at some point, you got to get that stuff addressed. It's just going to adversely affect your ability to get money if you don't. It's worth doing. Okay. Also, other factors of fundability have to do with your financial statements. So make sure they're good. On the personal side, make sure your personal tax returns make sense. Okay. Because a lot of times they're going to rely on the income of your personal financial statements. They're going to look at P&L statements. So for example, I'm getting a credit line right now with Regions. I want an SBA credit line. Well, an SBA credit line with Regions requires a personal financial statement. I had to fill one out today. I filled one out today to get over to them. So the better my financial statements look, the better chance I have of getting that Region credit line. So think about these things as well, where you're set up and your financials look as good as you can, because the better loans you want, SBA loans, term loans, those are going to look at some of these. Sometimes they look at financial statements. Don't get me wrong. We've got cash flow financing. We've got all kinds of loans in the past that didn't look at this. Then we got an SBA loan that did. Now we get an SBA credit line that does. So financial statements on the personal side will be taken into account for the better kind of financing. So some things to keep in mind there as well. You also need to know about the credit bureaus. Okay, look, there is a credit bureau known as check systems that most people don't even realize exists. And you need to know about credit check systems, because check systems is basically what's looked at to make sure that you manage your bank account responsibly. So you've got to make sure that you build your check systems credit report. And I'm going to give you a huge bonus today. I mean, this is big. It's massive. Here it is. It's huge. Okay, no, here we go. All right, so here it is. creditsuite.com/check systems. CHEXSYSTEMS, check systems. creditsuite.com/check systems. Take a screenshot of this. I promise it's worth it. Here's what I did for you. I put together a page that has everything you need to know about check systems. It gives you your report for free. It gives you your check systems credit score for free. It lets you put security freezes, lift security freezes, add a security alert, or dispute with check systems, all at no cost. And I put that there for you at creditsuite.com/check systems. Now keep in mind, I'm not trying to self-sell here, but if you are working with Credit Suite, if you enroll with us and you're working with us to help you improve fundability, build business credit, get financing, we do this with you. We get your check systems report. We review it with you. We help you dispute any inaccuracies. This will affect your ability to get bank loans and open bank accounts. So make sure you check out your check systems, credit reports, and scores. Okay. Make sure you also know how to get your LexisNexis credit report. I can easily come in and do a search on Google to get a LexisNexis credit report for free. I don't think I have mine here. I'm going to look really quick. I do. You know how I pulled it out so quick? Because it's the biggest folder in there. Check this out. This is my LexisNexis credit report, just so you know what I'm talking about. That's it. Okay. Over 300 pages. This is what you've got to get, because Check Systems Credit Report has way more information than you're ever going to believe that it has. Every phone number I've ever had in my lifetime, every email address, every address I've ever had, every vehicle I've ever owned, including VIN numbers, every insurance policy I've ever had, the building materials of my home, the title company I used to close, the interest that I paid, the bank that actually did the financing, every license I've ever had issue, every license I've ever had revoked, every traffic violation I've ever had, any criminal history whatsoever, sex offender registry, all of that stuff is in this report. It's the most intrusive thing you're ever going to see in your life. Over 300 pages. It's absolutely absurd. Now, let me tell you why it's important. Here it is. This is what lenders are using behind the scenes to make all kinds of decisions about you. You think you got a bankruptcy off your credit report? It shows here. You think you got judgments off your credit report? They show here. From the lifetime, your entire life, they all show here. Okay, so you've got to get a copy of this report. You got to look it over. You got to control it, and you got to make sure that you dispute anything that's inaccurate. You can get it by looking online, free LexisNexis credit report. You fill out a form, they mail it to you. Like I said, it's a book, and start going through it and make sure that information's accurate. If it's inaccurate, it causes all kinds of problems. I almost couldn't get an SBA loan because there were judgments that showed up on my LexisNexis credit report that weren't even right. They weren't even legitimate. I had to prove to LexisNexis and the bank that they weren't right. LexisNexis removed them, and I got the loan. But you got to know what's on here, because this is why a lot of lenders will turn you down, because of data here that you don't even know exists. So make sure you get this as well, because just about everything you could think about is on a copy of that credit report. Okay, so let me go back. I want to make sure I ask some of your questions before we wrap up here. Okay, Wood, Nevada. Thanks for coming in. I meant Whoop, Nevada. Oh, Eric's a fan of buying land in Nevada. I am too. I own like almost an entire town in Nevada. I bought so much land out there. And Jess says, can I start a nonprofit with my father's credit if the business is in my name? Yeah, absolutely you can. That's called credit line hybrid. You can use his credit as a guarantor to be able to get upwards of $150,000 in financing. Here's our number right here at the bottom of the slide. Just give us a call. We can talk to you more about that. Chucky says, hey, I have some trade lines, but they aren't showing on my credit report. Only one that shows on NAV. Okay, well, first of all, the reason for that may be because you don't have enough. Dun & Bradstreet will not even report anything on your credit report till you have 3 accounts. 9 out of 10 times somebody tells me this, they don't have 3 accounts yet reporting to D&B. That's why they don't have a report. So I have to have at least 3 accounts for D&B, 1 with Equifax, 1 with Experian. If you do that, that will populate that credit report for you. Chucky says, question, why is Experian personal credit much lower than my TransUnion? Because 40 point different, because there's different information reported. If you look at your credit reports, you'll see that a lot of accounts you have that report to Experian don't report to Equifax, and they don't report to TransUnion. Different credit issuers report to different bureaus. Some report to TransUnion and Equifax. Some only report to Experian. So if you look at your credit reports, different stuff is being reported to each bureau, and that's why you're seeing such a big dramatic difference in your scores. Okay, and DL says, how do the Chase credit bureaus, business credit cards work? What are the dangers and risks of getting into credit repair business? Is there a good formal training program? There's a lot of training out there in credit repair. I'm not your guy for that. I've been out of consumer credit for too long to be able to give you good guidance, and I'm the first one that taps out and says I ain't your guy. But if you do some research, there's a lot of good companies out there that will teach you how to get into the credit repair business. Derek Harper is one. Derek, D-E-R-I-C-K, Harper is his last name. He's the best trainer I've ever met in the credit repair industry. He's a guy that work into. And Chase Business Credit Cards, same way. You can get some with a guarantee, personal guarantee, some without. Some you can get just because you have business credit built. Some will rely on consumer credit. So hopefully that answers your question there. Whether it's a good idea or not to get into the consumer credit business, that's up to you. It depends on what your passions are and what your strengths are as well. And Deal also says, how many bank accounts can a person sign up for in a year? I don't think there is any restriction on how many you can have. How do I get most bank accounts because possible without getting flagged by check systems? You're only going to get flagged by check systems if you've defaulted on your bank accounts. If you start opening accounts and then overdrawing them and leaving negative balances, that will get you in trouble with check systems, not because you opened too many of those reports. And Julie says, hey, next on my list, get Alexis next. Everybody should. And Neil says, how can I buy viable and buildable land in Nevada, close enough to town to enjoy living there, but have peace and quiet? How much per acre? It depends on where you're buying out there. I buy $1,200 for 10 acres, which is why I buy, but it's different in every section of Nevada. And, there's all kinds of places like Land Moto where they have land for sale. So there's all kinds of websites out there that just list land for sale, like Land Moto. And in my world, when I created a business doing it, I would write anybody with land out there offering to buy their property, and I would just send out thousands and thousands and thousands of letters, blanket solicitation letters, until people would respond and sell it to me. But Land Moto and many other sites out there can work for the purpose that you're looking for. Okay, so credit bureaus, don't forget to keep an eye on your business credit reports as well. So we went over a lot of stuff, and I actually just kind of did a recap, so I'm going to skip the recap section. Next time, we're going to talk about how to leverage your business credit for fast growth. We're going to talk about using vendors to start building a strong business credit profile. This takes place tomorrow, and why a business credit profile is necessary, and how to use your business credit profile to grow even faster. All of that is going to come in tomorrow. A lot of you said you want to get in touch, you want to talk, you want a consultation. Give us a call. 877-600-2487, 877-600-2487. That's my number. My number's in my email, info@creditsuite.com. Okay, you're also able to schedule a consult online at creditsuite.com/consult. And by the way, on that consultation, we'll do a funding assessment for you. We call it a funding assessment consultation. We'll do a funding assessment to see all the funding you can get. We'll do a fundability check, tell you what to improve with fundability to have the best chance of getting approved for financing. We'll get your business credit report for free, go over those with you, and give you tips and tactics to build your business credit as well. You got value from the training? Hit the like button. It's all I ask. Hit the subscribe button as well. That way you can get notified when we go live. You go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time. Top right of our page, creditsuite.com. You're able to access our social links. We have daily tips on Facebook, Instagram, Twitter. I have 30-second to 1-minute video tips on TikTok and our Instagram channel as well. Thousands of videos on YouTube. And I have a podcast with over 500,000 downloads, very popular, called The Business Credit Financing Show, where you can learn all that you need to know about getting credit and financing for your business and all the ins and outs of running and growing a business. We have all these experts come on that teach you how to brand, grow, scale your business as well. All of that you can access at the top right of our page, creditsuite.com. Okay, Chucky says, hey, thank you, Ty. Makes sense. I actually have about 3 trade lines of making transactions. On trade lines, I have to spend at least $50, right? That's not necessarily the case. Okay, it can be the case. And what I mean by that is that some credit issuers have this requirement, but all don't. Not to self-promote, but again, if you're a client at Credit Suite, our business finance suite tells you these things. Every account you apply for, we tell you, hey, look, you need to spend $50. It doesn't matter how much you spend. We tell you every one of these accounts so you know, and that makes it really fast and easy for you to build your business credit. By the way, you're going to actually spend less money with us building your business credit than you will on your own, because there's so much stuff we give you for a free or for discount that you have to pay for on your own. But if you want to do it on your own, my advice is call the credit issuer and ask them how much you need to spend for them to report the credit. It's the best way of figuring that out if you don't have a system like ours to be able to help you along the way. So give us a call for the free consultation, 877-600-2487. And I look forward to seeing you on our next training tomorrow, where we talk about how to build business credit and using business credit to be able to fund your business growth. Thanks for tuning in. Have a great day.